Hi, I'm Peter Rose, founder of Longwood Currency Trading. I'm out walking the bow dog through the woods for an afternoon stroll, and we take a look out here at the fog. Oh gosh, I gotta watch where I'm stepping here. So it's a foggy, chilly, wet day in New England. It's a change. And I thought I would just mention some of the changes I've made in my own trading as far as setting goals. The other day I did a video, my last video, I was talking about managing your PL and how you use your PL to as a function of setting goals for profit targets and using PL as a underpinning structure for risk management in general. So when I initially started trading larger lot size positions in FOREX many years ago, the goal was to make $1 million. I wasn't going to try to do that on $20,000 or $50,000. I put a couple $100,000 at risk to use the trading skills that I had established up to that point, and say, you know, let's make this a goal to try to turn this couple $100,000 into $1 million, because I had done that in real estate. In fact, I'd made $1 million 3 times in my real estate career, and I lost $1 million twice in my life due to economic collapse, general economic collapse, but real estate collapse, because most of my assets were real estate based. But it took me 10 years each time to come back from that, to have another $1 million net worth. And I was finally able to retire over $1 million net worth and enjoy the fruits of that labor. And so some of the money that resulted from that was to fund a really larger size trading account. And what I did, because I had set this goal and had rules based around maximizing profits, I mean, I was making anywhere from 10 to 20% a month when I'm running hot, sometimes 8% against risk. I did 3 months where I made $30,000, not consecutive months, but they were scattered through the year. And I kept pushing and pushing. I went from trading 1 to 3 lot positions to trading 25 lot positions in about 7 months. And I got kind of full of myself, because as I'd come into the fourth quarter every year, I would say, oh, I'm up 80% or I'm up 60% on my money. I'm gonna really push the envelope here, and I'm gonna make this happen. And I've recounted this so many times in my videos, but I think it's an important lesson for everybody to gain. And I'm losing my dog here. I don't see him. Hey, Bo! Look at him. He's way back behind me. Hey, come on! Come on, come on, come on, come on. Sue just left to go meet up with her daughter. Bo doesn't want to be out with me in the woods, in the rain. So he's going to hang back. But in coming into the fourth quarter, and making this conscious decision, I'm going to push the envelope on these trades to try to go from 60, 80% up against risk up to that fourth quarter. I'm going to try to push that and try to go 120%, and really make a statement for the year. Now, I've made 6 figures in my trading, but I've lost a lot of money too with that kind of an attitude. And I got away with it a couple of times. As I said, one time I was up 80% against risk and ended the year 46% up. Because that fourth quarter, I blew it out, you know, but that final year, a couple of years ago, I did that same thing. I was up 80%, going into the fourth quarter. I maxed it out and I really screwed it up. I was just totally out of control, and I had gone from 1 to 3 lots to trading 25 lot positions in too short of a period of time. 7 months was not enough to build up a substantially sized bank to back that up, to say that when you're in a losing position, you cut that short, right? But when you have a lot of money behind it and not very much money left because you're pushing the whole thing to the center of the table, then you don't want to let go of the position because you have more fear of loss than you have you don't have that fear of loss. You have more of the greed factor that's involved in it. And so that last year I was up 80% going into the fourth quarter. I lost that 80% and another big 6 figures behind that. And I thought that was just really stupid. And I'm not going to put any more money into my account. So what needs to change? Well, going into the fourth quarter, instead of trying to make 100% on my money or something like that, how about if we just go into the fourth quarter and just play it normally, and let's see if we can sustain a 60% or an 80% end of year value to the account. Maybe it'd be 130%. It doesn't really matter, because I've cut back on the size of the lots that I'm trading, because I want to enjoy myself. You know, I enjoyed the challenge of going to $1 million. I know there's a lot of guys out there that do $1 million. They're trading at 500 to 1, and it's fun to listen to them and watch them, and they ultimately end up losing significant amounts of money, but they already have. I mean, I've lost 6 figures, but it didn't wipe me out. I still got money. All right. But I just don't think that from a mental standpoint, I'm more interested in making the $1 million than I am in having fun and building, trading the account and having a good time and making as much money from my trading as somebody would make for a year's income. I don't have to make $1 million. I've already made $1 million several times. So I know what it's like to make $1 million. And so making the FOREX trading, currency market trading work, because I think it's the most efficient, productive retail market that we as individuals can trade in, that I should be able to make double what my returns against the real estate were. And that's relatively straightforward. I'm constantly able to do that. When I follow my rules, I can do double-digit percent returns against risk in a month. So, you know, if I'm trading a small lot size, maybe I'm just trading 1 full lot, or maybe I'll trade 3 full lots. It's not about making the money. It's about being consistent with the trading and ringing the cash register and having enough money that instead of socking it away to try to make a bigger account, use that money and instead quit the trading for a week and go somewhere and have a vacation and have a good time. I'm 70, I'll be 76 very soon. And so I don't have any need to make vast sums of money or to prove anything. I'd like to slow my trading down so I can focus more on the students that I have that are taking fast track program or just doing consulting with me, and spend a little bit more time with them and nurture more of the great conversations that I have with people that have emailed me. We just check in with each other every now and then. That's a great way to invest my time rather than making the focus on trying to show everybody, oh, geez, I made, $30,000 this month. Well, what difference does it make to the person who's out there listening? How does that help you? How about if I take a a $10,000 account, because that's what everybody who's starting out of my fast track is. You know, you start with $1,000, you go through the fast track program, you get your structure all set up. We help you build your rules so that you're consistent on that $1,000 account. There's certain metrics that we want you to be able to achieve. Very short time frame that the course runs, 6 weeks. In 4 weeks, you should be up and running and going crazy and starting to develop some good metrics that gives you the confidence that you could take a full lot trade, $10,000 to trade one full lot. Because here in the U.S., you got to have margin, 5% of the cash value. Right now, some of the majors are like $6,000 to put on a one lot position. And so if you got 10,000 bucks and you lose 6, that gives you 4,000 left. That's 400 pips you can lose on that one lot. And so if you're going to lose 400 pips on a one lot, if you're experienced, then you shouldn't be trading, right? So it gives you a lot of flexibility and power, and then you can use that that money later to, well, there's all kinds of neat things that we teach when you get into advanced training and stuff that some people are trying to teach you starting out, and it's not practical because they're teaching you the wrong thing. You got to learn how to trade first, and then how to become consistent with that trading process so that you can go to a $10,000 account, then go to a $30,000 account, because you're the one that's interested in replacing your job income, not me. I don't have a job. I don't have to replace anything. I'm retired. I'm just going to use my money. If I take my account, I'll find a sweet spot that's really easy for me to trade, that the students that I work with can relate to. I mean, it's very difficult for a student to relate to me when I was making, 15% a month on my bank, when they're struggling to try to make 15% a year. In the, you'd make a 1.5% or something like that a month on your money, and you end up, or 2% on your money a month, you make 24% return on your bank. I think having difficulty balancing that amount of money, a 20% return on a $10,000 bank is $2,000, and I'm making $2,000 a week. So it's hard to as an educator, to have the student have compatibility with you when you're just on a whole other plateau, and they just say, well, you can do that because you got more money in your bank, or you can feel good like that because you know you can make 60 or 70% on your money. Well, let's back up a little bit and take the dollars out of it and come down to a working level where I can relax and have fun, and I'm not trading for the money. I'm doing what I'm teaching in the course, and the students can follow me in what I'm doing and say, gee, I'm trading with a $10,000 bank, and he's trading with a larger size bank, but not so much larger than I am, and this is what he's doing, and he's smarter than I am, so I should be able to do that. Why can't I do that? And I say, you can, if you follow the rules that we decided that you should be following. It's pretty simple. Then for the student to say, oh, you mean if I didn't do this, that's all I would need to do in order to come pretty close to what you're doing with your win-loss value and your average win value and some of the other metrics that we use to validate the rules that we have, such that if we're not performing at the metric level that we are usually performing at, then there's a problem, and we can go into our metrics and we can find out which one's failing us, and we figure out a fix for it. That's more important to teach somebody than it is to follow a Bollinger Band or put your life savings at risk on a fucking Fibonacci number. I mean, oh my God. So anyway, I thought I would have this little walk in the woods, and there he goes with the Mow Dog, and just try to set a better stage for you guys that are contacting me. And I'm getting more contacts now, and I think it's because of the general problems that the economy is facing that don't look like they're going to get much better soon, and also because of some of the changes that have been made, some of the economic conditions that we've grown up living with are changing as a result of that. The whole introduction to AI, for example, is changing the workplace. There's a lot of people out there that are in fear of losing their jobs. You're working the line at some assembly plant where your skills at identifying different things lead you to analyze some of the stuff that you're doing. And you're replaced because AI is going to be able to do that. You're a copywriter doing writing stuff for people that don't have a very good writing skill. Geez, you could get some of the AI apps that are out now, and they can write very well done copy for just about any topic that you want, as long as you know how to phrase the queries and the stuff that's going in. You have to have good input to these AI applications. You put shitty input in, you get a shitty result out. But it's changing the landscape. People are afraid. So where are you going to go to make money if your job is found irrelevant? And combine that with age discrimination. Jesus, I've had more people in their 40s contacting me now saying, hey, I see this barrier coming up at age 50. I see my physical skills starting to degrade. My son was an auto mechanic for many, many years. And I said, you know, look around at the older guys that are in the shop. He was in his mid-30s, I guess, at the time. And look at the older guys in the shop. Tell me why they're there. Well, they're scared of losing their job because they're making so much money and they don't have any other skill. They're scared of losing their job. So they put up with all the political bullshit that's going on in the shop. But their knees hurt. They got shin splints. Their back hurts. They got neck problems. They got all these kind of physical disabilities. And they got the two ski mobiles, and they take all these vacations. They have very little money saved because they're spending it all because they're used to making six figures. But their body is decaying and time's running out. So he looked at that and he goes, I don't want to experience that. I said, well, you know, let's rethink that, what you're going to do. And so he's been with the his town's fire and rescue service now for over a year and a half, going on 2 years now. But he's been working in the fire service area for probably about 7 years, something like that, and working at work. And he's taking his exams, and he was a volunteer fire department for a small team, and like I said, doing his study. You got to pass 2 firefighter exams and 2 medical exams, EMT exams, and a state exam before you can get your full certification as somebody gets hired as a full-time fire and rescue team member. And so he spent those years doing that, and so now he's got all that, and he's off. He loves the work. He's helping people. It counts, as opposed to fixing somebody's radiator on a car and having his body deteriorate. So he's proud of what he's doing, and he's happy with what he's doing. But he sees into the future that he's not going to be able to run up and down ladders for his whole life. So he's starting to work on other things, maybe a little car repair business on the side, doing oil changes and stuff like that. I mean, you know, you save a lot of money when you're young, and which is what he's doing. And then when you're forced into retirement due to physical problems or age or whatever, you have skills that you can get a little thing going on the side. His happens to be automotive repair. He's also been on the water since he's probably 7 years old, so he understands marine mechanics really well. So he's all set. What does the normal person do for a side hustle after you work in your factory job, or you work in the office as a secretary or an assistant? Where's the side hustle going to come from? What are you going to do? Bake cookies? You're going to start a cookie company? Or what exactly are you going to do? And so there is more interest in this trading realm. Unfortunately, a lot of the people are going into crypto because of all the hype and people that have made so much money there. And they don't really understand that there's no economic basis for the crypto market right now. There may be in 10 years, but crypto itself doesn't have any value. I mean, when we look at the currency market, we know that the value is in the economies of the two pair countries. There's a reason for the market. It's international commerce affected through the currency market, interbank market exchange. So you need to think what you're getting involved in through, and I'm finding that more and more people are interested in trading. Now, what do you do? Which trading do you do? If you go to my website, longwoodcurrencytrading.com, and you look at the currency trading page, I list 7 reasons why I feel that the currency market is the best financial market that retail investors can participate in. And so you should go there and read those 7 things and see if you agree with it. If you don't agree with it, go trade currencies or old tires or Pez dispensers or whatever you think you're going to do. But you better do something, because someday you're going to be 50 years old and there'll be job discrimination. Or you're going to you work a physical job and there'll be some kind of decay in your body that will not allow you to do that. Or the market will change and your skills become unnecessary. This is a big thing, these skills becoming unnecessary. You need to be forward thinking. It takes a while to come up to speed in any money-making skill that there is. Doctors take longer to make their money than someone who's going to sit at the window at Burger King and learn the skill to do that job. So the more complicated the job, the more money that you make. Or the more information and knowledge that you have that is important to other people, then you have skill that you can sell to other people. But it takes time. Currency market, like I said, you have to know how to trade if you're going to benefit from the courses that I teach. I will work with a beginner, but it's a customized program and it's involved. And I don't talk about that because my main vehicle is to help people that have 6 months to a year of trading in a live account, at least $1,000 at reasonable leverage, so you know what the issues are. And you're convinced that the market is good. I don't have to convince you that the market is good because you've been trading in it, but you're not having the success that you feel that you should have or that you want to have. So you want to get better at it. A brand new person doesn't know. They're just, I heard about currencies. I heard about crypto. I heard about dead mice sales. I'm going to get into that. I don't have the time or patience for that. But if you're serious about that, then the fast track program will take that experience that you have, and in 6 weeks, you'll have the whole thing done. And you will understand the principles, and you will have the structure necessary for you to replace your job income. Now, replacing your job income isn't going to be done on a $10,000 or $20,000 or $30,000 account at reasonable leverage. If you use unreasonable leverage, you'll lose all your money and you will have wasted your time. But I can show you how to take reasonable leverage in the beginning to build consistency in your trading so that you become skilled enough to understand when and how, most important when, you would bring the leveraging factor up a little bit, and you would add on some advanced things to take your trading, let's say, from 40% to what? 130%, 200%? I mean, there's guys out there in video land, they're making 300% on their money in months. So when you're looking at becoming more experienced and better at your Forex trading, go back into my video catalog and look at the way that I present financial education. Look at my bio. This gives me the credibility and the authority to be able to say the things that I do. And then find somebody out there that matches that not only has made some money in currency trading, but they can teach you. It doesn't do any good if somebody's made $1 million and they're trying to teach you by using Bollinger Bands and RSI and Fibonacci's and all the rest of the crap. Find somebody that's going to teach you trading and then applying reasonable and logical risk management to that trading and a clear pathway for building consistency in the trading. And once you're able to achieve consistency in the trading, and that takes, well, maybe in the fast track program is 6 weeks, and maybe another 6 weeks after that. You have all the knowledge and the information. You just have to go out and prove it then in a $10,000 account that you're able to manage the higher value of money and go from consistently making X amount of dollars to consistently making the same amount of dollars at the higher PIP value. And then all you have to do is add more money to that account, sell that beat up old truck and do that. Don't take that vacation to Disneyland this year. Use that $4,000 or $5,000 or $6,000 that you're going to put that into your trading account. Get as much money as you can possibly get, and do the same thing that you were doing on the $10,000 account with a $30,000 account and see how it goes. Because with a $30,000 account, you can, on reasonable leverage, 10 to 1, you can significantly impact your job income. You're making $60,000 a year. If you could make $6,000 a year off of a 2-lot position, or a 3-lot position, $6,000 against a $30,000 account, let's say, what was that, 36, 20%. Is your job at $60,000 going to give you a $6,000 raise? And even if they do, are they going to do that every year? But you've got this machine in the background that's going to kick off $6,000 a year. That's nothing to scream at. And because you don't need that money to live on, because you have the job, you trade for 2 or 3 or 4 years, and you compound that account to the point where there is enough money in there to come pretty close to, if not exceeding, what you're making for your job income. And wouldn't that be nice to be able to make half of your job income? You're 50 years old, you've got the skill, you're making 50% of your job income, you retire, you've got your pension if you have one. When you get 65, you get Social Security. In your country, I don't know what your evaluation for Social Security is, but now you're making 50% of your bank, and using that, pulling it out, because you're making 50%. Let's say it's $6,000 or $8,000, $10,000. You pull that $10,000 or $20,000 out, and you use that account to generate another $10,000 or $20,000 the next year. Maybe you leave a third of the gains in the account, and you're compounding that third increase into your money, so that eventually you're making as much money trading as you were when you were working. I mean, I get excited about this stuff because I've worked with advanced karate students. I've been in martial arts for 57 years now. I have students that have been with me for over 50 years. And we're still communicating together, and it's been a great time. But at a certain point in that student's development, I start teaching them about philosophy, economics. They have to work and learn a musical instrument. There's all kinds of things that we as martial artists do that are outside the scope of punching somebody in the face. And so I've been working with these people on financial knowledge and education. And many of them have been able to retire early. They're not millionaires or anything, but they're able to retire on the money that they've made, the money that they've saved, the investments that they've made, and combined with the Social Security, they have an okay life. You don't need $1 million to retire, but you do have to have some skills in order to generate money so that you're not depending totally on the trading for that money until there's just so much money coming off the trading that you don't even think about it. I mean, when I was trading, coming up to fourth quarters every year, I mean, geez, we'd take vacations. It didn't make any difference. You look out here in the yard, you see where the grass is a little bit darker. There's a culvert pipe that runs under there, and a whole new culvert system because we're living on a mountain here. So water is pouring down there, and they just chewed the old culvert pipe up. That all had to be dug up and redone. It was $6,000, and that was due today, right? Right now, when the guy did the work, now I was going to put that on on a payment plan of $55 a month. It was now. Where do you think that money came from? It came out of my trading. This deck that the Bodog is sitting on right now, let me see if it, yep. You know, that was put on with money from trading. Just spend it. You look at the roof on the house. That's $14,000. Cash money out, paid, write the check. Where do you think that money came from? Came from trading. So that's the position that you would like to be in, right? So there's just a tiny amount of work that you need to do if you're going to do it with me. 6 weeks. I'm going to invest a lot of my time in you. I expect you to be 100% involved in the process. If you're not have the time to do it, or you think there's a secret sauce thing, it's wrong. Think of it as going. You want to be a med tech, so you're going to have to go to school for a certain period of time to be a phlebotomist or a physician's assistant or whatever. You're going to need to go to school. It's going to be a lot of money, but you're building a skill that's going to pay you in the future. You got to look at the trading the same way. It takes a little bit of time, and it takes a whole lot of effort to learn this stuff. And then once you know how to trade, and you have been shown a process of trading, not just a bunch of shit that you throw against the wall with a moving average and an RSI and stochastics, and oh yeah, now I'm going to take the trade because it's Tuesday. It's just stupid. It's ludicrous what's being taught out there. So once you get to the point where you are serious about trading and you accept the fact that you need an organized process, go out and find somebody that can offer that to you and take the course. I don't need 500 people calling me because I can't take everybody. I'm retired and I'm an educator, which means I work with the student on a private basis. And so I'm retired and I enjoy trading and going out to dinner, and so I have a limited amount of time that I'm willing to share. So I only take a few people at a time because I want to spend a lot of time with those people and make sure that they're confident in the skills that they're learning so that they can start to work on replacing their job income. God, if the younger people out there that are listening to this would get involved in this stuff in their late 20s or early when they start having a job that actually makes good money, you learn this stuff, and then you work from, say, the time you're 28 until you're 31 or 32, and then you go, yeah, I don't need to go ring the bell at the van. I'm not going to go into work anymore. I don't have to do that. Because you're making the money, because you invested 2 or 3 years to get the skill, to have the confidence to add as much money as you can to your account so that the same 5 pips, instead of making $50, makes $500 or $5,000 for you. And that's why currency trading is so simple, is because there's no extra work that you have to do or extra time that you have to spend at it. It's a skill. Once you have the information and the knowledge and how to put that together in a process, now you've got a repeatable skill and you can replace your job income. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.